Hello, and welcome. Are you ready for the bull market? If you are, let me show you what kind of systems I came up with. So welcome back to the educational systematic trading videos, and little disclaimer. I'm not a financial advisor, so take whatever I say with a grain of salt and do your own due diligence. So here you go. Let me show you a little bit first before we dive into where we are standing on May 30th. Yeah, today's May 30th of 2025, where the S&P 500 is. It's 3.78% from its peak in December, I think, or beginning of January. I don't remember the exact timing, but basically that's where it stands right now. So it dipped down and came back up. Nasdaq 100 is pretty much the same, but Russell 2000 is still bibbling down, so it's still 15% down. Well, so overall, I would call it a slight correction to almost bull market. So if you are ready for the bull market, that's the reason why I came up with the system, is that will be the time to actually start executing this type of the system, because once it gets in, it gets going. So here's what I did back in prediction of my April 5th, and that was my good scenario. Apparently we are in better than good. We are in a great scenario. As you can see, we dipped down, went down. That's the market, and pretty much almost 19% down, 18 point whatever the number. I forgot the exact number, but basically almost 19% down, and then came back up. And now we're almost hitting the all-time highs, which is great. So as soon as we hit the all-time highs, most likely the bull market kicks in. Apparently this system actually kicked in already earlier, so we are pretty much almost there, bibbling right to go again into the bull market mode. So let's see what we can do. Now, how can we be ready for the bull market? Well, the best systems for the bull market are the trend following systems. The reason why they're best, because the trend following systems, they typically beat the market returns in the bull market mode. So when the market drops down and continues to go down, the trend following systems suffer. But when it's a bull market, the best bet is to get under the trend and follow the trend. Right? So the trend is your friend is for a reason. This is where you actually can utilize that trend is your friend approach. So there are two types of trend following in this. I mean, in at least what we preach and what we use. It's the long term or short term. I separate them by the duration of how long you hold on to your trade and how long you stay with the trend. So I will be using the short term trend here just to spice things up. In the next video, I will be using maybe the long term, so you will see what it means to have a long-term trend following, but here's the short-term trend following, okay? So, here are the system rules. I will just dive right in, okay? We will use Nasdaq 100 universe of stocks, so not every single stock under the sun, only the Nasdaq 100 universe of stocks. All of those stocks are, pretty much all of them are liquid, and they're not penny stocks. That's the reason I don't even have these two rules shown to you, but make sure that you do play with only liquid stocks or the non-penny stocks, because those are the stocks, they live in their own world. We don't want to deal with that world. We'll deal with more established companies, more companies which are everyone uses, and most likely the pension funds and hedge funds, they're all using the same types of the stocks. So in this case, the trend identification, meaning that we're planning to see that the stock is in the uptrend, longer term uptrend. On the short term, we don't care where it is, quite honestly, but on the longer term uptrend, it means that this particular stock at least made 20% in a rolling trading window. 1 year trading window. So which means that it's not losing money over the year span, and it made at least 20%. I can even test it with 0%, but in this case I just tested 20% just to get a little bit better returns for you. Then on top of it, it also is breaking above its own 50-day simple moving average. So as soon as it's above the simple day moving average, it's a legitimate candidate. But when we have lots of candidates in our stock universe, so let's say we have 100 stocks in general, right? Maybe 50 of them are eligible candidates right now. Which one do you choose? Well, we say, okay, let's rank them up by the highest rate of change, meaning that the ones which return the most over the last year. Okay? So those are the ones that we will get in. But how do we get in? Because it's the breakout type of strategy, I don't want to just get in randomly. I want to get in only if this particular stock not only is breaking out above the simple moving average or made at least 20% or more over the last year, it also has to go at least 0.5 ATRs, which is the 14-day ATR I'm using, from the previous day closing price. So that means that it moves in a right direction, in our direction that we want to take it in. That's when I will get in for this stock. I hope that is clear. If not, ask the questions later. In the at the end of this video, you can see there is a info@tradingsystems.com email which you can use for questions. But anyway, so this is where we are choosing those stocks and we're getting in that as the order is on stop order. Okay. Because it's a trend following, and as I already mentioned, the trend following systems, they fail when the market is in a bear market. So we just want to avoid it to trade it altogether during that time. Okay, so we just will say, okay, when the market is trading, and by market I mean Nasdaq 100, which is the NDX for short, or the SPY, which is the proxy, the ETF for S&P 500, both of them, when they trade above its own 200-day moving averages, it doesn't matter where they are, just as long as they're above 200-day simple moving averages, that's when we'll get in. Okay, that's when we will allow our candidates to be considered a candidate. Otherwise, we'll just not even consider these candidates. We'll just stay flat. Sometimes it's staying in the cash is much better in this case for this type of a system versus trying to do something. I'm not going to show you in this particular video, but I played around and you can see clearly that it will just have much bigger drawdowns if you continue trying to buy using this particular systems if you don't have that market filter. So that is why I'm using the market filter. Now the position sizing is pretty simple. I'll get into 5 positions at a time. And if I filled all the 5, that's it. I'm not going to go into more. And even though splitting it across the basically 20% of whatever the equity that I have. Now, system exit rules. Very simple. Either stop loss or the profit target. And we have additional qualifier for the market on close, again, just to prevent when the market really starts falling, like in COVID times. We just want to get out from any positions, just be done with it. But the main idea is that we have the stop loss and the profit target. Both of those things dictate which is called risk to reward ratio. That is why I'm using the different risk to reward ratios. Here I'm using 1 to 2. I'm risking $1 to win $2. I hope that makes sense. Okay, that is why it's 2 to 4. 2 ATRs for my stop loss and 4 ATRs for my profit target. In both cases, which is odd for a lot of people, I'm not using the actual stop order or the profit target order. It's both of them, the virtual orders, meaning that what I will do once the day is finished, I will check it before the next market opens. I will check, did I hit my profit target or did I hit my stop loss? If any of them happened, then I will exit at the end of this day. Otherwise, I'll just sit tight and I'll do nothing. It doesn't matter where the market was, like, if it was up and down. All I'm looking for is just a closing price. If my price is above my profit target, or my closing price is below my stop loss price. Okay, so yes, it can lead to a lot of anxiety when the market keeps falling and it keeps falling. You think that it's better to get stopped out, but in reality, I tested it out. It's not. In this case, it is better to actually do the virtual stop loss and virtual profit target. Okay, and as I said, the additional rule that we have that when the market itself is trading below the 50-day simple moving average, we'll just close all the positions altogether. Okay, that's just additional thing for this. Now, here's the return. As you can see, it generates pretty significant compounded annual returns, the CAGR. It has a pretty big drawdowns, which is typical for the trend following systems, by the way. This is what you don't see a lot of advertised by a lot of other people. But that's pretty much what you will get in this case, to a 30% drawdown, 31 even percent drawdown. But the characteristic of the trend following is in the following here, is that the win percentage The number of times that I win is less than 50%, but it's not as important. Because remember, risk to reward ratio is 2. So now I'm going to win more than I'm going to lose. So that's the reason why I'm 1.68 in here for the win-loss ratio. And my my overall trading duration is only 8.3 days. So my wins, average wins, are much bigger by 1.68 times than my average losses. So that's the reason why we're winning in this particular case. Okay. So here's the yearly return. So sorry. Did I go? That's real yearly returns. How you turned $100,000 in 2007 to 2.5 million in this case. Not that I'm saying that you can actually do it this way, but this is like the hypothetical in this case, and you can see how many trades per year it does. Like in the bear market years, it basically does almost nothing. How it actually fares as far as the annual gains and what the market did, S&P 500 in this column, and that's the difference. Like let's see how crazy the 2020 can be. Well, because this is the trend following system. And here's my monthly. You can see again, some months it can be crazy. And I'm going to hold too much for here. And here's the typical trades. Again, you can see that like right now it will be in Tesla, Apple, I don't remember how to pronounce some of these names. Basically, I just know the tickers, but not the names of the companies anymore. Okay, so you can see that it started in May. It resumed from March. It was staying flat, and then it started in May again. As I said, it's good to have the trend following system on your side when the market starts to get again raging bull. Maybe not raging bull, but at least in the bull mode. Okay. Now let me do just quickly experiments and to wrap up this video, so you will see that it is a stable system and it does work. Okay. So the system, let's try different risk reward ratio 1 to 3, and different ways. As an example, let's try it with the 2 ATRs and 6 ATRs for the profit target. What we'll try the 10% stop loss and 20% profit target, because some people don't understand the ATRs, but they do understand the percentages. It's very easy. What we'll try it again, the same R&R 2 and 3, 1 and 3. And then what if instead of holding the very next day till the market close, I will hold it for only market unopen. Okay. So here it is. This is the 2 ATR stop loss and 6 ATR profit target. Still significant returns. Almost the same drawdown as before. Pretty good. The win-loss ratio. It's just the duration is 9.3 days now instead of 8.3 days. Here's the 10% and 20% profit target. Again, significant returns. It's pretty much the same drawdown, pretty much almost the same win-loss ratio, 10 days hold. Here is, again, it's the 10% stop loss and 30% profit target. Very significant returns again. As you can see, we're beating the market, right? That's the most important part, that when the market starts raving, we are raving much faster and much bigger, right? So that's the reason for the short-term following in this particular case. And just almost 11 days hold. Okay, now, and here's the last test where I took the original system, where I had the market on close as my exit, and I put it as market on open. So, I mean, there is a variability, but you can actually save a little bit more on the drawdowns that way. Still a significant win-loss ratio, same 8.3 days hold, obviously, because it was the same thing. So now, quick conclusion. Is it a stable system? In my opinion, yes, because plus or minus a few CAGR, not a big deal for this type of a system. Okay, so that means it's stable, especially because the drawdowns didn't grow by like twice in size, right? It's pretty much the same drawdowns again, plus or minus a few points over here. So it's pretty stable. Can you make money in bull market? Absolutely. That's what it's designed for. Do you have to hold strategies for a long time? Nope, it's just around 8 to 10 days. I mean, depending on which version you choose, as you saw. Well, can you trade it by itself? Yes, maybe. I would personally say no. Have a suite of systems where you trade. Just one of them will be this type of a system, because as you saw, the drawdowns can be significant, and you really don't want to go into too big of a drawdown. Personally, I'm not a fan of going into too big a drawdown, especially if I want to trade a big amount of money. If it's a smaller amount of money, Maybe I'll go for something like this because if, let's say, small, by the way, by small I mean that you need to have at least more than the PDT trader just to be sure that you're not triggering any kind of PDT trading, because as you saw, the PDT is the pattern daytime trader. As you saw that it can trade only 8 days per position, but sometimes you can get stopped out on all the positions within the week, right? And PDT rule, as far as I recall, you cannot trade more than whatever 6 positions per week or per 5 days. There's like a weird rule. I don't remember the exact rule, but the idea is that not to tempt the fate, trade with at least $30,000 kind of approach here. Or if you see that the frequency is not fast enough, then maybe you can trade with even with a smaller account. But I would suggest to trade with a higher account, higher dollar volume of your account, just not to trigger any kind of a PDT rule, because they will suspend your account for 60 days if you trigger it. Okay, so or you need to put up more money. So hence the reason for this. So once again, I would suggest to trade with the slew of other systems, not just this system by itself, but it's up to you. And once again, as I said at the beginning, do your own due diligence. You don't have to trade the way I traded. I'm just suggesting that this is the way that I personally trade. Okay, so if you have any questions, please write it to info@tradingsystems.com and we can talk. Otherwise, you can check out our books. Lawrence actually released a new book. I don't even have this update. He has the 3rd book on Amazon, and you can check it out by typing in Lawrence Bensdorp. And my 2nd book will be coming at the end of the year as well. So I hope you find this informational and interesting. And if yes, leave a comment under the video, and I'll see you soon.